I personally believe that Mr. Adani is absolutely correct, in his thinking and in his saying, and what he's saying is at a much higher level than we would look at. But I mean, his vision is way beyond just looking at the stock prices of his companies, and he's looking at a much bigger, clearer picture of India's growth, and I support that. And I think some of the attacks that have happened on the group over the last 6 months are expected, because when you grow like that, when you are successful, there are people who may not be happy with that. But I don't think that the kind of strategy that the group is following, and in fact maybe it's a blessing in disguise what happened, because it gave them a reason to deleverage, to restructure the balance sheets, to come back stronger. I personally believe that a lot of restructuring that they have done in terms of just deleveraging the founders' balance sheet and the company's balance sheet is going to lead to material success for the entire group. I think the assets are very high quality. The management is quite good. So overall, I would say that I won't be surprised if the whole group stocks come back and outperform the market over the next couple of years.
Okay, and that leads me to my next question. I mean, not just for the group, but per se, this whole infra story in India, it's kind of making a bit of a comeback, Abhay. I mean, GQG is saying how they value is one thing, but just the fact that the quantum of projects being unveiled in the country, the number of private players, private global funds wanting to take a part in that, are you excited about making money through the listed route into the India infra opportunity, or are there other ways to play it?
No, I think, Neeraj, I think that the listed space is the only way to play it. And I'll tell you why. Because this execution of these projects requires significant amount of own balance sheet strength. So you need to have very large amount of capital to see through these projects, because these projects go through their ups and downs. And you can't get into a situation where at the time the project is struggling for some reason, you are dependent on external capital. So I think your own capital is very critical for success of these large projects, and that only large groups and large companies can afford. And we saw this play out in a different way 10, 15 years ago, when a lot of small companies that got into infrastructure development, and most of them have died, gone bankrupt, are into NCLT for the simple reason that they did not have the balance sheet strength to see through these projects. And a lot of power projects, road projects got stuck. NHAI, had to struggle through completing some of those projects. But this time around, the good thing is that the infra development that is taking place by people who have the balance sheet strength, the management capability, and the technical capability to see through these projects. So this time, I think that the infrastructure development over the next 4 or 5 years will be much better than what we saw the last time around. And I think the only way for investors to play that is to stay invested in very high quality infra developers, rather than trying to play it through smaller players who may have a very volatile time executing these projects.